Hello, listeners. Today, in our episode, we are going to talk about the India steel industry, and also we need to see how the India steel industry is progressing and what does it mean when the steel industry is rising. Will it impact our economy on a boom side or on a downfall side? So, steel is just all around us. It's in the bridges we are crossing, the cars we are driving, our home appliances, and the towering skyscrapers shaping the modern cities. In many ways, steel, you can say, is like the backbone of our economies. It holds things together and keeps everything running very smoothly. And just as you might gauge someone's health by their lifestyle, steel demand can reveal a lot about the health of an economy. Exactly, you heard it right. The health of an economy is seen by the steel demand. When economy grows, steel also demand prices to meet the needs of the infrastructure projects, manufacturing projects, and also more projects. But when the growth slows down of the steel industry, steel demand often takes a hit. On the global stage, China leads in steel production, making over half of the world's steel. India, while smaller by comparison, hold its place as the second largest producer, although China's lead is substantial. Because we can see that China is the number one in the steel production. China products more than 50% of the global steel, while India's share is around 10% in the global steel demand. Even so, India's role is expanding as it works to meet both domestic and global market. In India, two major players, Tata Steel and JSW Steel, dominate the steel industry in India. They both recently shared their quarterly earnings, giving us insights into how they are handling the ups and downs of the market. But before diving into their results, let's look at the bigger picture in the global steel market. What is actually going on in the steel market globally? Since China is the largest steel producer, it heavily influences global prices. When China makes more steel than it needs, it exports the surplus, putting down pressure on the prices. Because you are aware with the economic concept that whenever the supply is greater than the demand, the prices often fall. So the same concept is used by the China. They increase their supply so as to reduce down the prices which affect its competitors. If the demand is more than the supply, then the prices would inflate. But in this situation, the China always supplies more of the steel, lowering down the prices. Now, right now, with China's economy struggling, local demand for steel is low. But instead of reducing the production, China has maintained its output, exporting over 100 million tons of excess steel each year. This oversupply has been pushing the global prices down. You can assume that the China is supplying to their local markets as well as to the global market. Even though their local market demand has continuously been falling for the steel, but still they are exporting more and they are maintaining their production level. Because of the excess supply in the foreign market, this has reduced the prices for the steel. And yes, this is the reason we can see nowadays that in the Indian market also the steel prices are continuously going down. In response, countries like the US and the EU have imposed the tariffs and anti-dumping measures on Chinese steel imports to protect their local market. India is also looking at ways to protect its steel makers from cheaper foreign competition, considering tariffs of up to 30% on certain steel imports from China and Vietnam. So this way we can see that already in the local market, the China's steel demand is declining, and in the foreign markets, the tariffs have been continuously high to reduce the imports from China. So this means that their production might hit, and also the prices would be affecting a lot. Now, stating with the Tata Steel in the recent quarter 2 of the financial year 2025, they had reported a profit of 833 crores, a big improvement from last year's loss of 6,196 crores in the same period. This turnaround is largely due to a one-time factor. Last year's numbers were impacted by impairment charges, which dragged the profits down, but weren't repeated this quarter. However, talking about the Tata Steel still faces the challenges. Revenue from operations fell 3% year over year, totaling to 53,905 crores. The reason? They earned less on each ton of steel sold, especially in the major markets where prices are under pressure, as we can continuously see that because of the China's oversupply, the prices in the global markets were very down. And this has impacted our JSW Steel as well as Tata Steel. These are some of the content which you should know. If we are living in the India, we should know how our economy is working and how our steel industry is also working. Will it be profitable for overall development or will it impact our economy? Now, in India, Tata Steel has increased the production by 5% to 5.27 million tons. driven by the strong domestic demand which the Tata Steel sees in the Indian market. Still, even with the high production, the revenue from the Indian operations has still declined by about 5%, mainly due to the lower prices and the competition, as we have seen because of the cheaper imported steel. The Indian suppliers or the Indian consumers are now continuously importing it from China, even though the Indian government is continuously banning it, imposing higher tariffs so that the Tata Steel and JSW Steel could expand their production. In Europe, Tata still faces different obstacles. In the Netherlands, they are dealing with weaker demand and higher costs due to the environmental regulations which they see in the Netherlands. Now, this is also affecting the profits of the Tata Steel, and in the UK, the company is moving towards greener steel production, which involves shutting down an old blast furnace in Port Talbot. While this shift supports the long-term sustainability goals which the Tata Steel is continuously looking for, it adds significant short-term cost for them because they are disposing of shutting down their old blast furnace in Port Talbot. And whenever the industry is closed, this would hit a long for the company. CEO TV Narendran acknowledged these challenges, mentioning issues like inflation, slower economies, and the impact of cheap Chinese steel on global markets. However, Tata Steel is moving forward with a major investment in the growth and sustainability. For example, the company has recently expanded its Kalinganagar plant, increasing its capacity from 3 million tons per annum to 8 million tons per annum. This brings the total Tata Steel's production capacity in India to around 26.6 million tons per annum, a significant part of India's total steel capacity, which is about 160 million tons. Tata Steel is also focused on sustainability. They are setting up an electric arc furnace in the UK to reduce the emissions, backed by a 500 million government grant. Plus, they are working on cutting costs, aiming to reduce expenses by €100 per ton by mid 2025, especially in the UK where efficiency is the key for them. Now, let's turn to the JSW Steel, another major player in the steel market. For the recent quarter, JSW Steel saw its revenue drop about 11% year over year, down to 39,684 crores. This drop was mainly due to the lower steel prices and weaker export demand, showing just how much global market dynamics impact even the biggest companies like JSW Steel. Their operating earnings before interest and tax, a measure of core profitability, also fell, dropping from 7,886 crores last year to 5,437 crores this quarter. Still, JSW Steel increased their production, producing 6.77 million tons of crude steel, a 7% rise from the previous year. In India, production has hit a record 6.63 million tons from the JSW Steel. However, steel sales actually fell by 3% from last year, mainly due to the weaker export demand. Once again, the culprit is the flood of the Chinese steel, which we are seeing that the Chinese firms are oversupplying the steel which is demanded in the markets, and in global markets, they have continuously driving the prices down. JSW Steel CEO Jayant Acharya attributed this decline in performance to temporary external factors, because these are not the permanent factors, but these are some of the temporary factors which is affecting the India steel market. But there's a positive note ahead. The cost of cooking coal which is a key ingredient in the steel making, has decreased, which should help improving the margins in the upcoming quarters. In terms of strategy, JSW Steel is focused on the growth and sustainability. They are aiming for 50 million tons of production in India by the financial year 2031, with expansion projects underway at their BP, SL, and the Vijayanagar plants. Like Tata Steel, they are committed to reducing their carbon footprint and aiming for carbon neutrality by 2050. Currently, a quarter of their operations are powered by the renewable energy, which aligns with their broader vision for the sustainable growth as well. In summary, both the Tata Steel and JSW Steel are navigating a challenging market, dealing with global pricing pressures, Chinese competition, and also the local challenges. They are not just working to increase their production, they are also investing in sustainability to prepare for the future because of the zero carbon. Now, their responses to today's obstacles reflect the broader steel industry's effort to balance the growth and sustainability in an unpredictable market. This was the condition of our Indian steel market, and we have seen in this video how it is impacting because of the Chinese oversupply. This recommendations were all about the steel industry, and there are no recommendations on buying the stocks or any of the thing which would be impacting the share market. If you have liked our video, do subscribe to our channel and share it with your friends for more such interesting insights. Thank you, friends.